Hey everyone, welcome back to Corporate Decoder. Today we're diving into the financial world of Benitec Biopharma. Get ready because it's a bit like watching a magician try to pull a rabbit out of a hat, but instead of a rabbit, it's money, and sometimes it disappears. We're looking at their 8K report, which is like a financial quick update telling us about major events that have just happened. This report is dated March 26, 2025, so this is pretty fresh information. The big news here is about how Benitec Biopharma is raising money. Think of it like asking investors for cash to keep the company going. They're doing this through what they call an underwritten offering and a direct offering. Basically, they're selling shares of their stock to investors. First, they're selling shares to the public through a group of underwriters like Leerink Partners. They're selling 1,143,000 shares at $13 series each. It's like selling slices of a company pie to many people. They are also selling warrants, which allow investors to buy more shares later. In this case, warrants for 300,000 shares. Second, they're also selling shares directly to some big investors called Averill Master Fund and Everell Madison Master Fund. This is a direct offering of 900,000 shares, also at 13.00 each. Think of this as selling a big chunk of the pie to a few key people. So what does this all mean? Well, after all the selling, the company has a lot more shares out there. As of March 26, 2025, they had over 25 million shares of common stock. Plus, there are warrants out there that, if used, could create millions more shares. These warrants are like coupons letting people buy shares later. There are warrants out there for almost 6 million shares. Also, there are pre-funded warrants for over 15 million shares. If all these warrants get used, there will be a lot more shares of Benitec Biopharma overall. On the plus side, the company just got a big injection of cash. Selling over 2 million shares at $13 a piece brings in a significant amount of money that they can use to fund their operations, research, and maybe even expand. This could be a lifeline for a biotech company that needs cash to develop new drugs. However, there's a potential downside. By issuing all these new shares and warrants, the company is diluting the value of existing shares. That means each share represents a smaller piece of the company than it used to. If you owned shares before, your ownership stake is now smaller. It's like cutting a cake into more slices. Each slice gets smaller. Also, the fact that they needed to raise money this way might suggest that they're not generating enough cash on their own. Biotech companies often rely on funding from investors because developing new drugs is expensive and takes a long time. So it's not necessarily a red flag, but it's something to keep an eye on. Whether this was a good move or not really depends on what they do with the money. If they use it wisely to develop successful products, it could pay off in the long run. But if they burn through the cash without making progress, it could be a problem. Benitec Biopharma is in a risky business, like most biotech companies. They're trying to develop new treatments for diseases, which is difficult and expensive. This report gives us a peek into their financial watching. If you found this helpful, please subscribe, like, and comment.